Hello, everyone. Welcome to Women in Film's second Tuesday of the month. And this evening, we're going to talk about taxes, how you do it in 2020, because there's a bunch of different changes. But before we start, I'm going to turn it over to Meredy to do our land acknowledgement.
Thank you, Virginia. We acknowledge we are on the traditional land of the first people of Seattle, the Duwamish people, past and present, and honor with gratitude the land itself and the Duwamish tribe.
Thank you, Meredy. So welcome Joanne Ort of Women in Film, CPA, Valerie Mosley, also CPA. Nice to see you here, and Petra Wilson. So we have a few questions, and we're going to ask you about how we're going to do our taxes for April 15th this year, because there are a few changes and we need to know about them. I'm hoping that you can answer some questions about stimulus payments, changes for this tax year, 2020, unemployment compensation. How do we deal with remote work and out-of-state work if we have that? And I think a lot of us do, especially during the pandemic. The difference between W-2 and independent contractor. I know that there's a difference now in how we can deduct expenses, and hopefully we'll get to tax credits. And also, there's always a question whether it's good to do standard deductions or itemized deductions. Now, I don't know if we're going to get to all of that. Does anybody have an opening statement that they want to make, or should we go right to questions that have been asked?
Valerie?
Hello, thanks for having me here. I think we should give it a go. There's a lot to cover, and there's also pending legislation right now. It's pretty rare that we have legislation this late into the year that can be retroactive, but that is on the horizon. It hasn't even, been signed yet, and we don't really know all that's in there. So there's a lot of mysteries. And the other thing I'm going to say is that the IRS, like everybody else, is behind. So they are going to be slow to reply to you. It's going to be a long wait on the phone. They're not going to process the paperwork that you send them quickly. So be prepared and bring just oodles of patience, whatever you've got, wherever you can dig deep and, breathe, and just know that lots and lots and lots of correspondence is going to cross in the mail. And, you're going to send something in, and then they're going to say, we never got it. And it's yeah, that's because their computer is in front of the actual processing of the paperwork. So, you might need to call, or you might need to just wait, or you might need to, just chill, or just keep trying. So I have more comments about how to interact with the IRS, but I just wanted to put that up front that, we a lot talk right now in the pandemic about new normal and maybe giving each other grace. And it's easy to hate on the IRS, but I think you're going to do well if you give them some grace too. That's actually gonna come back on you. It's going to make life easier if you just understand that it's hard on everybody right now.
Well, that's a lovely sentiment. being nice to the IRS. I love it. I love it. You know what? I apologize. Valerie, tell us just a little bit briefly about yourself.
Yeah, thank you.
And I'm sorry I didn't start off with that, but
no problem. I am a CPA, as you mentioned. I used to have a sort of a traditional tax practice for about 8 years after working for other firms, and I sold that practice a couple years ago because I'm really more interested in consulting with clients as opposed to turning out tax returns. I love teaching and answering questions. So I imagine that's why Joanne reached out to me. So I hope that I can help you all today.
And I didn't realize, Valerie, you've worked with creatives, right?
Yeah, I actually teach pretty frequently at Artist Trust. So, you know, that brings a variety of artists that come. And my former life is, I actually majored in music in college and have a dance background, and then have a certificate in physical theater, and have been a director and a conductor and various other things. So, and a performer as a physical, you know, comedian. So I do have that artist background as well. Yeah.
Nice. So you can you can commiserate with us who are in that creative field and sometimes don't really know how to deal with our taxes.
Yeah, it's a lot to manage. Yeah.
Yeah. So Joanne, I'm going to go to you. Tell us a little bit about who you are. I know, but
I am also a CPA in Seattle. I have my own practice. I've had my own practice for 15 years, kind of the same background as Valerie, worked for a few different firms before going out on my own. And have been on the board of Women in Film for, I think, 10 years.
Yeah.
One of my very first clients was a production company, and it's just sort of snowballed from there.
I was your client too.
Yeah.
So give us a little, you know, a little update about what you can tell us about what's new in 2020.
Oh my goodness. Makes your head spin, right? Like Valerie said, there've been 2 stimulus bills so far, and there's about to be a 3rd stimulus bill. So it's keeping us accountants very busy. And I think Valerie's pretty much got the first and the second one down. I know she's taught a class on, I think the one that passed in January. The one that's about to be signed is interesting as well, because one of the pieces that I think a lot of people are going to be interested in is it's going to exempt the first $10,200 of unemployment from taxes. So, which is a good reason for people to sit tight and not file quite yet. Because if you file right now, it's going to be taxable on your tax return. The system's just not ready for it yet. But it also brings up, we were talking about this earlier, brings up this dilemma, because what do you do? Because if you had it right now, any stimulus that you're going to get is based on your most recently filed tax return. For a lot of people, that's 2019. And you might have had a great 2019 and a sucky 2020. So when you get that 2020 filed, you're going to get all the stimulus money, but you don't want your unemployment to be taxable. So what would you do in that instance, Valerie?
Yeah, if you had lots of patience and you were savvy, you would file now knowing that you would file an amended return, and that just would require sort of a commitment and a degree of comfort with paperwork. And filing an amended return, you know, on your own. I don't know what it's like on a consumer software TurboTax or what have you. I can imagine there's probably some difficulty there, but TurboTax or whoever should be helping you with that. Since you're talking about comparing 2019 to 2020, I also want to just throw in another tidbit. There are 2 not film-related credits, but just general credits. One is the refundable child tax credit, and one is the earned income credit. And those are for, you know, moderate to low income folks. But they do require that you have some income in order to get the credit. So if 2020 was like a super crappy year, it's possible that you wouldn't qualify for the credit. The earned income credit in particular is meant to reward people for working if they are kind of at the low to moderate income levels. And so you can actually use your 2019 income on your 2020 tax return in order to calculate these credits. And I don't know if consumer level software is going to prompt you to do that, but that could be a big swing for somebody who normally qualifies for the credit and then had a super crappy year in 2020 and doesn't qualify for the credit, using their 2020 income as the kind of base pay for the calculation. So go back and grab your 2019 numbers to make sure you're maximizing those two credits. So that, again, that's the earned income credit and the refundable child tax credit.
So before I
Another-
get to Petra, oh, you had something to say, Joanne?
Oh, well, another credit that I wanted to bring up that a lot of people probably don't know about, if you're self-employed, you can take the credit for paid family leave, which is typically only available if you're an employee and you're working for someone and you take time off because either you had COVID, you were exposed to COVID and had to quarantine, you've got kids in school so you can't work, you took sick leave. Your employer gets the credit for paying out that sick leave. But if you're self-employed, you can file and get that credit on your tax return. And I think a lot of people don't know that.
Yeah, it's Form 7202, is that
Yeah.
right? I think so.
Yeah.
Yeah.
Like I said, I think if you're doing your taxes on TurboTax, that one's not going to pop out at you.
Yeah, I'm sure. This is a lot.
I know.
And there's more.
So I just want to go, before we get to Petra, I want to ask you, you said something about holding off. So are you saying don't file early before April 15th, or wait till April 15th, or do an extension? Otherwise, you would benefit from doing an amended return, which is always a hassle that none of us want to deal with. So
If you file today and you have unemployment that you're reporting on your tax return, you're going to pay tax on that unemployment. But as soon as the new bill passes and everybody's systems get updated and you file, you're not going to pay tax on that unemployment. So if you file today and you've got unemployment, you're going to want to amend. You don't have to amend, but you're going to want to amend your tax return.
Yeah.
Or if you've already filed and you have unemployment reported on your tax return, you're going to want to amend your tax return.
And just to clarify, like Joanne said, it's the first 10,200 that we think, this is what the bill probably is going to say. The first 10,200 of unemployment benefits are probably going to be exempt from taxation for folks with income of $150,000 or less. So if you fit in that range, if you had that kind of income, then you might want to consider waiting to file. But as Joanne pointed out, if you're waiting for your next stimulus payment, you want that stimulus payment to be based on your 2020 filing, then you might be in a hurry to file. So there's this sort of tension between whether you want to file now or not.
oh my goodness. Okay. Well, all right, Petra, excuse me. Let's go to you and tell us a little bit about yourself, please, and then chime in on all of this.
Sure. So I am not a CPA. Please, if I cite an opinion, believe me, but if not, it's an opinion. But otherwise, I do corporate accounting, mostly internally, consulting and budgeting, contract analysis, contract compliance. Recently branched out into the regulation CF crowdfunding listing with the SEC for the Fantasy Network, and we wrapped that last year. We're going to get annual reports out here soon, and my CTO keeps on designing new systems for new contracts, and eventually I hope that we'll template a standard, and my life will become much easier, and I can take on some tax clients and investigate all these recent changes to the tax code. But right now it sounds like basically if you calculate your tax on the basis of 2019 for credits and then recalculate it on the basis of 2020 for credits, and you still owe money related to tax on unemployment, then you should not file immediately, but you should make sure that you're current on any quarterly payments that you're due on for your regular self-employment tax quarterly payments, or any out-of-pocket payments related to retirement earnings or repayment on a what do they call it, 401k or 403b. And so all of those wonderful details. So, and probably without the assistance of software over the counter, because those people are still trying to program a solution to deal with the January 28th, 2021 draft of the Form 7072. And so, yeah, and all of these mostly impacting low to mid income people who can afford to go to CPA.
Yeah.
So I'm really thanking everyone who showed up for this to provide valuable insight, because I'm already learning. And I think that sort of summarizes so far what we've got. Thanks.
Yeah. I want to just throw in another new thing, unless you want to recap.
Nope, go right
anything we
ahead.
talked about. Okay, so one other new thing for this year is that there is a potential to delay some part of the payment on your self-employment tax. So if I'm assuming that, you know, there's some freelancers here, folks who have small production companies or anything like that, and if you're your own boss in any way, then you might be paying self-employment tax. And just briefly as a side note, self-employment tax is the non-employed person's version of payroll taxes. So if you're a regular employee, you pay Social Security and Medicare tax out of your paycheck. And so when you're self-employed, you have to pay Social Security and Medicare. And when you do that, it's called self-employment tax. So for regular employers, they get to delay the payment of their portion of the Social Security tax. And then they have to repay 50% of it at the end of 2021 and 50% of it at the end of 2022. So when you're self-employed, you pay both the employer and the employee portion of Social Security and Medicare taxes on your own earnings. And so for the portion that is the employer portion, you can take the same benefit. And it's not a credit and it's not a deduction, it's just a delay in paying your taxes. So you get to calculate that little employer portion of your self-employment tax, the Social Security portion, and you can skip paying it in on this tax return, and then pay the 50% of it back at the end of 2021 and 50% of it back at the end of 2022. Couple of details. One is the due dates are 12/31/2021 and 12/31/2022, which is not the date your tax return is due. So it's going to be kind of a complicated, weird thing that I'm guessing they're going to fix those due dates, but that's just a technicality. And the second thing is, if you want to take advantage of this, you're going to have to be disciplined and pay attention that it's not just like, yes, it is free money now, it's like a free loan, but you are going to have to pay it back. So if you're somebody who's not disciplined and can't kind of keep track of it, you may not want to take this benefit, because it might surprise you down the road that you have to actually, you know, it will seem like an add-on to your tax returns in the future. But if you need some cash now, which was the point of this provision, you can take advantage of it, especially, you know, if you maybe didn't make as many quarterly estimated tax payments this year as you were supposed to. This would be a good way to kind of soften the blow by kicking the can down the road on this. And so once again, this is the employer portion of the Social Security portion of your self-employment tax.
The nice thing about that, Valerie, would be if somebody gets to April 15th and they owe, you know, normally you would, if you don't pay it, you've got penalties, and it's a way to delay and not have to pay the penalties.
Exactly.
As long as you file timely.
Yeah.
Yeah, I mean, there's different penalties. There's late filing penalties. There's failure to pay what's on the return. There's, you know, failure to, you know, there's underreporting penalties. They get you coming and going, right? There's all different kinds. But yes, ideally you would file on time or file an extension, and then you would, you know, elect into this option with that filing. Yeah.
They're probably just trying to avoid having to accept a whole bunch of filings for automatic installment requests, which is another option if you still owe taxes from last year. And
Yeah, but when you set up an installment agreement, you have to pay to set up an installment agreement. And then you're paying interest and penalties because you didn't pay it,
Yeah, so if you have credit, you should pay your taxes.
right?
Right. Though they did mid-year, the IRS kind of came out with a sort of a policy that said, you know what, we're going to just be more chill. We're not going to have a specific like COVID exception, but we are going to take more, we're going to be more open to reasonable cause arguments about why you should deserve a break on penalties. So if you do need to, you know, sort of write a tear stained letter about how difficult your year was, they might be more open to that. They're also more open to offers and compromise, there's more higher limits for automatic payment plans, like you were saying, Petra, and more collection delays, you know, can be requested. So there's a little bit more kind of breathing room around all that. We don't know when that's going to kind of cut off or shut down, but they sort of announced that as a policy in mid 2020, and I haven't heard otherwise since. I jotted down another idea for you if you want it.
Yeah, yeah.
I don't want to take up too much air in the room here, so please don't let me, you know, dominate here. But I just wanted to throw out another suggestion. A lot of people have been confused about whether or not they received a stimulus payment. And by the way, you know, we're calling them stimulus payments. They're also called EIPs, which is economic impact payments. You might be, you know, hearing different names. And you were supposed to receive a letter that told you that you got the money, but there was a lot of confusion around those. Some people got letters and lost them. Some people got their payments on a debit card. Some people got them and direct deposit into their bank account. Some people got checks. And then some people got, you know, like a modified amount because their income was in the phase out range. So there's a lot of complication, right? So my recommendation is that to go onto the IRS website and set up an account. They now have accounts on there. So you can, you know, there's you know, they'll ask you all those questions to verify your identity, and you want to bring a copy of your most recently filed tax return with you when you do that. And then you can actually look in your account and see what payments you've made. And then you can also, you should be able to see the economic payments that they think that they've paid you. By economic payments, I mean those stimulus payments. So if you're confused about that, and you do want to know whether you got that money or not, because if you deserve it, then you should be requesting. If you deserve it and you didn't get it, you should be requesting it when you file your 2020 tax return. So you want to be really clear when you're filing your 2020 return whether or not you already got those stimulus payments.
But if you did, you don't have to do anything.
That's right. I don't know, Joanne, do you have other thoughts about that?
No.
I really like those logins, by the way. That's not something that you used to be able to do. It was sort of
Right.
before COVID's, but it was still something really new last couple of years. And it used to be a really huge pain in the ass. So I have a lot of, pardon me. It used to be hard when clients would show up and they would have several years that they hadn't filed. And now it's a lot easier to get transcripts and everything. You don't have to call them, or you don't have to be right next to the fax or wait to have it mailed to you 6 weeks later after sending in a form.
That's right. Yeah.
It's almost like the 21st century or something.
Yeah, I know. What? Crazy times.
Virus eventually catches up, right?
Yes. Well, they, you know, they're, yeah. Well, anyway, I don't.
The only place
They
I
do
fax
eventually
anything
catch
to is the IRS. Who uses a fax
What was that,
machine?
Joanne?
The only place I ever fax anything is the IRS.
Oh.
Who uses a fax machine?
Doctors still do.
Okay.
Oh, wow.
I don't know why, but they do.
I jotted down one other thing that's new
Keep
for
going.
2020.
Great.
So, Virginia, one of the things you mentioned is, should someone itemize or should someone take the standard deduction? And with the Tax Cuts and Jobs Act that came in for 2018, the standard deduction got a lot bigger. And so that meant that a lot of people stopped itemizing. And in view of that, and in view of the pandemic, Congress said, you know, we want to encourage people to make charitable contributions this year. But normally the charitable contribution deduction is taken on Schedule A, which is where you itemize deductions. So if you're not itemizing, you may not be kind of incentivized to take those charitable deductions and make those charitable contributions. So what they said was, hey, everybody gets up to $300 deduction on top of their standard deduction for contributing cash, not in-kind goods, but cash to charitable organizations in 2020. And then in 2021, they've maintained that, but they've made it so married filing joint folks can actually go up to $600, and then $300 for everybody else. But for 2020, it's $300 for everybody, whether you're married or not. So if you've been donating this year, you know, I know some people, there was kind of big campaigns, like they got their stimulus payments and they're like, hey, I'm going to donate this because I know other people are having a harder time than I am. Maybe you did something like that, or what, you know, or just, you know, donated extra. Anyway, up to $300, you can just deduct right there on the front of your tax return, even if you didn't take the itemized deductions. So watch out for that. It'll be nice. I mean, $300 isn't necessarily going to move the needle hugely, but every deduction you can take is a good deduction.
Yeah, right. Every bit helps.
Yep.
I did have a question about deductions, and I was reading something about if you're W-2, you cannot deduct certain things that you would normally have deducted for your work. However, if you're 1099, you can deduct everything that you had spent for your work, and that's different than it used to be. Is it not?
Yeah.
That's right. That's another Tax Cuts and Jobs Act change. So starting in 2018, you can no longer take unreimbursed employee expenses as a deduction. So yeah, they're just virtually lost.
Yeah. So that happened in 2018?
Yep.
Okay. I guess I missed it.
Yeah. But there is, and Valerie, you might know, I can't remember the code section, but and I've dealt with this with a couple of employers. Employers can reimburse because it's the COVID's considered a national emergency. Employers can reimburse employees for things, for home office expenses, and it's not taxable because we're in a national emergency.
Oh, so
I forget what code section that is out. I want to say it's 139 or something, but.
So it's not taxable for the employer
Either. Yeah, the employer can reimburse you for, you know, any office, you know, if you needed new furniture or, you know, whatever at home, and it's not, the employer gets a deduction and it's not taxable income to the employee.
Nice. That's kind of a nice, fair thing.
Yeah.
Yeah, there's the only technical part is that you have to like specifically account for those things. So you can't just get like, oh, here's X dollars to spend on your office. That would be taxable to you. But if you got reimbursed for specific things, you know, here's $45 I spent on my keyboard, and here's, you know, X dollars I spent on this bookcase, then that would be non-taxable to the worker.
Yeah, yeah, or a Wi-Fi booster or something like that.
Mhm.
Yeah.
Or some employers are paying for employees' internet, you know,
Right.
because everybody's working at home.
Yeah, yeah.
Right. Yeah.
Normally they would have to report that as a fringe benefit, right? Because it's
Mhm.
for their personal use.
Yeah, it would be a taxable.
Yeah.
Do we have other questions?
Yeah,
Or Virginia,
keep it
did we
going.
go through your original?
Well, I don't know. I'd have to look again. I don't know, but I thought I would address some of the questions that we have in the chat or comments. So Petra, you said I don't know if you said this, but here, I'm going to address this now and ask again, or maybe we can reiterate this. If you receive the full amount due for the first and second round of stimulus payments, including any payments for eligible children, you don't have to do anything. So I just wanted to reiterate that.
The only reason that you would complete that section of the return would be to claim the credit if you felt that you hadn't received the appropriate amount. But again, they do allow you to use different tax years in figuring out some of these credits. So,
Okay. So here's a question from Abby, who is on the board of Women in Film. So for those that work for the government, there was Social Security tax law that was done and government workers had deducted.
Valerie, that's your question. I know where she's
Yeah,
going with that.
Yeah, was there, and she goes on to say, was there ever an explanation for that? And how are we supposed to do our taxes for 2020?
So I gave you the whole kind of story about how if you're self-employed, you can kick the can down the road for the employer portion of the Social Security tax. Well, that was actual law that was passed. But our dear president actually made a memo, an executive order essentially, that said that if as an employee, you want to defer the employee portion of your Social Security tax, you can do so. And many CPAs were like, please don't do that, because if you delay it, then the employer has to collect it back from the employee later. And what if the employee leaves that company? It could be just a big old mess. And also, a lower tax withholding, that means bigger take home pay. That's a good thing now. But what that means later is like an exaggerated, reduction in your take home pay. And so it just sounded like a mess. But unfortunately, part of that memo was that he basically forced this upon government employees. They didn't get to choose. They just were required to delay paying their portion of Social Security tax over that time period. I don't exactly remember, but it was sort of late summer, I want to say, until the end of the year. And so the deal is that the employees are required to pay it back. Part of the tax law that was passed on December 27th expanded the time period over which that payback occurs. If anybody's interested in the exact date, I've got it here on my other screen. I can look it up in a second. But the point is that for government employees who are forced into this, you are going to have to pay back that Social Security tax that you got to take home in 2020. And it's going to just happen by virtue of having, more taxes than normal withheld from your paycheck. And the weird thing, though, is that your W-2 for 2020, it was prepared to reflect what actually happened. And then what's going to happen is that once your Social Security tax gets paid back over the course of 2021, instead of that being like adjusted or corrected on your 2021 W-2, don't ask me why they did this, but what they're going to do is prepare an amended 2020 W-2 for you. And you're going to have to amend your personal tax return in case there's any part of your tax return that is impacted by your Social Security tax. Now, there's a lot of folks who never hit the Social Security wage limit. And if that's your case, then you can probably not amend your 2020 return when you get a new W-2. But if you're somebody who does hit the Social Security wage limit, then you will have to amend your 2020 tax return after you get your amended 2020 W-2, which could happen well into 2021. So, I mean, I don't need to get political here. I have lots of opinions about our former president, and this is one where I just felt like, dude, you blew it. He meant to do good, but it was not good.
The way he went about it was all wrong.
Yeah. Pardon my language.
As if it wasn't convoluted to begin with and difficult, right?
So that's the answer to that question.
Okay. So I have another one here, and I'm not exactly sure what this means, but I'm going to read part of it. For those that received the $1,200 or $600 or didn't receive that amount, that stimulus amount, are those supposed to be claimed? Do you claim the stimulus?
If you
check?
didn't receive it, but you're entitled to it, then you want to make sure to file your tax return and indicate that you didn't get it. So then it will be a credit on your 2020 tax return.
Do you pay taxes on that stimulus check?
No,
Okay, but you do claim it as income?
no, it's a credit.
Oh, okay.
So if you received the credit, if you got that check, then there's no impact on your 2020 tax return. But if like you only got 300, but you should have received 600 based on your 2020 income, you'll get the additional 300 when you file your 2020 tax return.
Oh,
Yeah,
good.
if anyone recalls the Bush tax cuts,
Yeah. Yeah.
it's the same. It's actually
Yeah.
virtually identical, which is kind of, I mean, if that's really all that it.
Well, the stimulus payments are all a reconciling item on your 2020 tax return. So if you made too much in 2019 that you didn't qualify for the stimulus payments, but your 2020 income's down and now you qualify, you'll get all that once you file your 2020 tax return. If the inverse is true, you don't have to pay it back.
That's a pretty good deal.
Yeah.
I have another question here from Amy. If you are self-employed and have a .2 FTE part-time job on a college campus, can you still file Form 7202/paid family leave?
Yeah.
Yeah, so the only reason you wouldn't be able to do that is if your employer paid you for sick leave or family leave, you can't take the 7202 credits for the sick leave and paid leave for the same
For the
days.
same, you get a total of 10 days. You can claim it for a total of 10 days. So if you were paid as an employee and took 5 days of the paid family sick leave, you could take 5 days on 7202.
Do you need a doctor's note though?
Mm-mm,
No doctor's notes.
no.
No, that was actually written into the law because they knew, like, oh God, we can't actually take everybody. We just got to take our word for it. And some people will be audited on it, and they're going to have to come up with some sort of proof.
But you didn't have to be sick. You don't necessarily have to have had COVID. You'd have to, a lot of people were exposed and were told to stay home, or, not feeling well and stayed home, or
Yeah.
if you were home with your kids and couldn't work because you got to babysit your kids.
If you had a 13-week run schedule, then they canceled the show because the governor said that they couldn't have a theater.
Yeah. Huh?
Yes, though the paid family and sick leave wasn't just a general quarantine purposes. This was for like what Joanne just said.
Yeah.
You have to be specifically at home because you're taking care of somebody who's sick, or taking care of a kid who is home from school, or you yourself are sick or suspected to be sick or exposed, and
So
therefore
there has to be some concept of illness.
Yeah.
Okay.
right, illness or
necessarily
caregiving. Yeah, illness or caregiving, essentially.
Oh, the FMLA.
Basically, yeah, they kind of borrowed from that for this. Yeah, because they recognize that many states don't have paid family leave rules, and so they just kind of imposed it for this purpose during this time period, and just said you get to stay, employers get to get paid for paying you to stay home, and then they added on, as a self-employed person, you get to sort of pay yourself for staying home in the form of taking a credit on your tax return.
Mhm. I keep on thinking of that idea of asking for a doctor's note. Can you imagine? Imagine if they had to deal with doctor's notes at the IRS. Oh no, here's another one. My kid was sick.
Right. And let's face it, there are people who always try to get around the thing. I mean, how many forged doctor's notes would we see?
Right.
I mean,
Yeah, yeah. Okay, so I have another question here. Lisa applied and received an EIDL, which I don't know what that is. What is that?
economic injury disaster loan.
Oh, okay. So Lisa applied and received an EIDL, which she repaid, but still owes interest. Which portions are tax deductible?
The interest would be tax deductible because you had to have had a business to get the loan. So the interest would be deductible as a business expense.
But most taxpayers are cash basis. So if you have deferred the tax or ultimately not responsible for the tax, then you cannot claim it as an expense. Or I'm sorry, the interest. If you deferred the interest or ultimately found not responsible for the interest under the forgiveness, then yeah.
But it sounded like the interest was paid.
Oh. They completed repayment, but still owe interest, right?
Right.
it's
She repaid the loan, but still owes
But
interest.
Huh.
Yeah, and the IEDL, is that's only for a self-employed individual?
No.
Businesses could take the EIDL. That's primarily who got it, but also some self-employed folks. Yeah.
Okay,
So,
but it's not the kind of thing that individual could receive the loan under. It's SBA.
no, you have to be self-employed or a business.
Yeah, have a business.
Most people got their EIDL like in the form of basically a grant. So I'm
Right.
surprised she had to pay it back. But definitely, you know, it was not intended. The first $10,000 or up to $10,000 could have been a grant. But yeah, then other people, if you got beyond that, then it's like a normal loan with some SBA benefits, of course. But yeah, so when that interest is paid, it would be deductible as a business expense, but only when it has actually been paid.
And for those that got the grant, but not the full EIDL, if you just got the initial grant, that's no longer taxable.
That is correct.
Okay. I have a question here from our Facebook Live folks. Many of our colleagues report both 1099s and both 1099s and all W-2s. Can we still, oh, actually we answered this, but I think we need to ask, we need to reiterate this. Can we still deduct the expenses? So can we deduct those unreimbursed employee expenses on the self-employed employment portion?
The portion that's related to your 1099 income, you can deduct. The expenses related to your W-2 income, you can't deduct.
Right.
And generally where you pay an expense where it could be related to one or the other, the IRS is going to say that you have to say that it's related to your personal or wage income. Yeah.
You might be able to get away with prorating.
That's what I do, is I
between the
prorate.
two.
Like
Yeah,
a cell phone. Well, I'll look at the number of days you work as an employee versus a contractor and prorate cell phone, you know, certain expenses.
And
Yeah,
that would be
continue.
acceptable?
Yeah.
Yeah. Continuing education is another classic example where you're sort of taking classes to maintain or continue your, you know, professional skills. And in that, you know, that could apply to both your job and your contract work. And, you know, you could prorate that across days or maybe gross income from each activity. Like that. Yeah. And by prorate, I just to clarify, so that would mean, you know, let's say you spent, you know, $500 on a class and half your income was from W-2 and half your income was from 1099 work, then you would deduct 250 on your Schedule C where you're reporting your business income, your 1099 income, and then their other $250 would float away.
Okay, thank you. That makes good sense. Hey, I think, wait a second. That's all of our questions. I'm shocked because
Wow.
you would think you'd think there'd be a million more. I think probably everybody doesn't know enough to even ask what questions should be asked. So
Yeah.
what are your,
It's-
go ahead.
Oh, I just had one other topic. I was just going to ask if maybe we can throw out to the viewers, did anybody take any money out of a retirement plan this year, out of an IRA or 401k? Because there might be some provisions that we could share with you. If that doesn't apply to anybody, then I'll let it go. But there's some cool stuff there that you can take advantage of.
Well, I did.
Okay, great. Well, so if you had a COVID-related distribution from your retirement plan, and if you look at the rules, it's actually pretty broad. If you can read that and say, gee, most of us could say that our retirement plan distribution is COVID-related. I mean, you can't just take the money willy-nilly, but do read through the rules because they're pretty expansive. And in that case, you can, if you choose, do two things. One is you can spread the tax on that withdrawal over 3 years. And then also you can pay back the money into your account and get the tax back that you paid over those 3 years. So the forms, as you can imagine, to do those calculations are a little bit tricky. But if you just needed essentially kind of to borrow from your plan for a little while and you can put it back, then you can avoid the tax altogether. And if you still want to keep the money, then you can spread the tax over those 3 years. And for the first $100,000, if it is a COVID-related distribution and you are under the normal ages for taking a retirement plan distribution, you can skip the 10% penalty. So I recommend to everybody, if they did take money out, in haste or with desperate need or anything like that, that you go and find those rules, or you can shoot me an email and I'll send them to you. And see if it's a qualifying COVID-related distribution, and if it is, you can take advantage of these provisions.
Valerie, do you have 3 years to pay that back?
You do.
Do you have to pay it back ratably over 3 years, or can you
No.
pay it all back? So how in the world do you figure that out for taxes?
It's goofy.
You have to know.
The form does actually walk you through it.
And what happens at the end of the 3rd year if you decide not to pay it back?
Then you just pay the tax that's due
in that year. So you could essentially delay tax until that 3rd year.
No, so even if so the form works, let's see. So you can elect to spread the tax over 3 years, and so unless if you the chunk, the first third, the tax is due on that. And if you paid any of that back in the year, you would reduce the amount of tax for that year.
Okay.
But then the subsequent year, you pay the next third and so on and so on. But the form it's a complicated form, but it walks you through, okay, how much did you take? What's 1/3 of that? How much did you pay tax on? How much did you put back? And it kind of, this rule is actually not new. Like Petra referred to the Bush era economic stimulus. There was another one of these in the past, and they're using
Similar.
the same form.
Yeah.
Yeah, so this is if you needed money and you needed to take it out of your IRA because you didn't have enough to live on, and it's because of COVID and the pandemic, that's the situation.
Yeah.
Exactly, yeah. Mhm.
Okay. All right. So I've got another question here. This is Adrian and their spouse filed married jointly. They owned a business, made a small amount in 2020. Do they file self-employment taxes separately from their wife? First question. Do they file business taxes because they need to itemize on Schedule C because of loss of income?
So I can dive in, and then Joanne, or you guys wanna?
Sure.
Okay, so actually, can you say that, the first question again?
They owned a business, made a small amount in 2020. Do they
Mhm.
file self-employment taxes separately from their wife?
Yeah, so self-employment income is reported on a joint tax return or a married filing separate tax return. Either way, it's reported on Schedule C. And typically the person who owns that business is the person who files that Schedule C. And the Schedule C is just a subschedule of the larger income tax return.
Right.
So you need to identify when you file that Schedule C, who's kind of responsible for that income. Now, recall that there are actually two kinds of tax on self-employment income. There's income tax and then there's self-employment tax. So the income tax on that income will just kind of be a part of the joint tax return or the married filing separate tax return, but I'm going to assume joint here. So the income tax will just be what it is. It's just part of the bigger tax return. But when it comes to self-employment tax, that is calculated on an individual basis. It's still the schedule on which it is calculated is still a subschedule of the big fat tax return. But you have to identify which person is exposed to that self-employment
Owns that
tax.
business.
So if both of you are working in a business, then you would tell your tax software, hey, this is 50-50. But if it's one person, then you say, okay, Adrian, that person is the person who on whom the self-employment tax should be calculated. So you need to specify that when you are filling out the Schedule C, kind of who's responsible for that, because it will impact how the self-employment calculation is done. So that's the first question. I think I sort of answered that one.
Do they file business taxes because they need to itemize on Schedule C because
Yes.
of loss of income?
So if you made, if you had revenues from operating a business, you'll want to file Schedule C, and then you'll add up the related expenses, and then you'll either arrive at a profit or a loss. And either one of those is going to kind of roll up into your larger tax return. So either it will add to your income, or it can actually pull down your income if you had a loss from that business. So yes, I recommend completing the Schedule C, even if it's just simple, like, yeah, a portion of our internet and some supplies and a few small things. Or maybe you had big expenses. You built a whole website and, spent money on marketing, what have you. Any of those expenses would go on the Schedule C there, and could, again, be subtracted from the gross revenues from the business, and then you'd arrive at a profit or a loss.
Yeah, loss of income is kind of a curious term. In general, reduction in revenue is not an expense. It's just a reduction in revenue. On the other hand, most taxpayers are cash basis taxpayers. So if you didn't actually get paid, you certainly don't have any revenue, and wouldn't claim revenue even if you were owed money until you actually got paid. On the other hand, you can elect, and if you've gotten that far, you know, you can elect to be on accrual. You can accrue accounts receivable, and you can write off an expense on bad debt. So if you did claim revenue and you did later you were not able to collect on that revenue under accrual election on the Schedule C, which is pretty rare, then you would still be able to write that off, but you would have to file a Schedule C to do that.
Petra, that's a great point. Yeah, you don't get a deduction for just not earning money that you
Right.
expected to earn.
Yeah. I thought I was
You
going
don't
to
have
do
claim the
so
income
well.
either, unless you get paid.
So if you're self-employed and file a Schedule C, do you absolutely have to pay self-employment taxes?
If your net profit is $400 or more, yes.
I understood it as gross revenue. You have to declare the expense. I mean, you will pay self-employment tax only if it's over the threshold, but you still have to file if your gross receipts are over $400, my understanding, because you have to claim the expense on the form by signing.
You need to file the Schedule C on the first dollar of
Yeah.
income.
Income is income.
Income is income. But if
$400
the bottom
for
line
that.
of the Schedule C is $400 or more, then you'll be
Then you
filing,
pay self-employment tax.
you'll be paying self-employment tax.
Is that automatic on, like, if you're doing TurboTax, is that automatically
Yeah.
calculate that? Okay. I'm looking at the questions and some of them are not clear. So here's one. Tally wants to know any advice if you have worked full-time for an employee, an employer the first half of the year, then self-employed the second half of the year. Oh, who should file before impending tax reform and who should wait? Is that
Well, if
clear?
you-
Should I read it again?
Yeah.
Is that one question from Tally?
I think so.
Okay.
Maybe it's two. Maybe we take the first. Maybe we
What
take the first
what was
part.
the first one again?
Worked full-time the first half
Oh,
of the year.
first
and
half.
Yeah,
self-employed
Tally
the
wants to
second.
know any advice if you worked full-time for an employer the first half of the year and then self-employed for the second half of the year.
I mean, the easy part is you were an employee for a period of time and you were an independent contractor for another period of time. So you don't have that. A lot of people have a mixture where they, it's all over the place. So it's easier
Right.
to split your expenses. So the minute you become an independent contractor, you have your own business. So it's important to start keeping track of all your expenses related to, your work as a 1099 contractor.
Right. Yeah. So that's kind of the important part because those are the expenses that you can deduct, the
Right.
ones that you're issuing or asking for a 1099. Okay.
I'll just add in, Joanne's answer is spot on. That as a self-employed person, a lot of us don't have a lot of spare cash right now. And we just talked about people taking money out of their retirement plans in order to kind of cover life expenses in 2020. But if you do have spare cash and you have net income from your self-employment, you can actually make a contribution into a retirement plan based on those earnings. So that's a really great way to pay yourself and get a tax deduction for doing it. So you can make a contribution to an IRA, a SEP IRA, or a Roth IRA, and sometimes even both. So you could do a SEP IRA and a traditional SEP IRA and a Roth, some combination of all of those. So if you have net income from your business and you've got some cash to spare and you want to, do some
Start
savings
funding your
I always
retirement.
recommend. Yeah.
Okay.
Yeah.
I'm reading this before I ask the question, so I understand it. So Jalissa has a HSA question as domestic partners. Partner is on W-2 job plan. What is the contribution max? Is it 3,600 per person, like a married or family contribution, or 7,200 per person? Oh, wait, those are separate questions, but should I read?
Is the question about the employee, the partner who has an HSA plan at work? Long story short, Joanne, Petra, you guys can correct me, but the limit depends on whether you have a single only plan or a family
Or a
only
family
plan.
plan.
And so the person has to basically look up and see, do I have a family only plan or a single only plan? And based on that, that is their HSA limit for the year. And the amount they can contribute up until April 15th is the total allowed contribution for the year minus any contributions their employer made.
But a lot of that's the administrator, right? Like the plan administrator.
Right. Well, it depends. It's not clear from the question if the HSA plan is
Is an employer
at the
plan.
workplace.
Oh, for
Yeah.
a self-employed.
And a lot of times an employer will fund a small amount, but you can then fund the balance of that and take a deduction on your tax return. If your employer funds an HSA, it's reported on your W-2. You'll see it on the W-2.
Another question just came in here. So Sarah has an LLC for an event that was canceled due to COVID. There were upfront costs, for instance, website and time to set up for the live event. Do they add the LLC to their tax info? I guess it's as a total loss, or do they add the LLC to their tax info as a total loss?
Yeah.
Can I take this one?
Yeah, please.
I know a lot of producers and artists who create entities. Sometimes they have real entities, sometimes I don't know. So, I mean, if you had an EIN for your LLC and you opened a bank account for the LLC and you ran deposited money into it and then spent money related to the project out of that bank account for the LLC, then chances are pretty good that you should file everything under your LLC. That the LLC will generate a K-1 from its tax return, and you would file the results of that K-1 either through your Schedule D or directly on your 1040 form. But if you're like some of the people I know, and you maybe had an LLC, but you also had somebody's bank account, and that was not necessarily opened under an EIN that had anything to do with the LLC, and it's probably related to somebody else's social security number, and you put money in there, and then you spent the money, then it's a lot less clear what happened to the LLC. And it may benefit you to file a zero return for the LLC if it's not very clear that it was an LLC, because the self-employment income impacts of that can have lots of different effects on your tax return, especially if you had other self-employment income related to other projects that you didn't necessarily have an LLC for, or somebody else thinks maybe they had an LLC for. So it's a really dangerous question when you start using other entities, which can be registered at the state level and not necessarily at the federal level. And that FDIC and banking generally controls how the IRS is going to see money that is sent through a bank account. If that's a personal bank account at a bank and you didn't ever register the LLC, then there may be other issues related to that audit. So yeah, something that definitely you should have a CPA or a qualified tax preparer review with you on this facts and circumstances, because it really can impact how it's interpreted. But that's my opinion.
Mm-hmm. So it sounds like
I think the first question you need to ask is this a single member? Is there one person, or is there more than one person? Because if it's just you, you're the only member of the LLC, then for IRS purposes, you're a disregarded entity and you file a Schedule C, just like, Valerie was talking about earlier with your 1040. If there's two people, then you're potentially, you would file a partnership tax return. But, and to go along with what Petra said, was this a true business? Was this set up with, what was your intent when you set it up? Because a lot of times that's what the IRS is looking at, is what was your intent? Yeah, maybe you messed things up a little bit, but what was your intent when you did this? It sounded like this person was going to have some sort of live event and set up an LLC for the purpose of this live event. And if that's truly the case, and there was going to be this live event and now it's all canceled, I would say if it's a single member LLC, then I would report it probably as a separate Schedule C on the tax return and take the loss. The other thing too, and I don't know if this would apply, but there's as part of the second COVID second stimulus package, there's what's called the shuttered venue grants. So it's possible if this was a live event, you might qualify for a grant for shuttered venues, because that's the grant itself was a little bit broad in that you don't actually have to own a venue, you have to put on live events.
Mm-hmm. Mm-hmm.
I heard one little thing that I want to just snag here. So the person said they spent money on things and they also spent time. Their own time is not tax deductible. So if, just like Joanne said, they were intended to put on an event and their intention was to make a profit, then the expenses would be deductible on a Schedule C. And if the LLC is a really clear entity, then yeah, maybe that would be a second Schedule C. But just make sure that there's no tax deduction for that person's time. They would only take deductions for actual costs paid. Yeah.
But if they did have the opportunity to file all of this on a Schedule C because they did not obtain the EIN for a multi-member LLC and open a bank account and run all the cash through a multi-member LLC under EIN, if they did not do that for some sensible reason and they instead ran it through their own bank account and then they had the opportunity to file it on a Schedule C because it turns out it was really a disregarded entity the entire time, then they would still have self-employment income on the Schedule C and would be eligible for the 7202 credit, which is kind of like taking days off.
Potentially. Yeah.
It sounds like all of us need CPAs.
I call these
easy.
I call the 3 stimulus packages the Accountantful Employment Act.
Love that.
That's all right. They cut us out of the Jobs Act anyway, right? We don't get to deduct the 20%.
That's right.
Neither do actors, which is horrid. Down with Trump.
Also, I don't know if Valerie knows this, I'm sure, but for 2021, is it just 2021, Valerie? Meals are 100% deductible?
If at a restaurant.
If at a restaurant.
Oh,
How is
yeah.
that defined? Can you get takeout?
Yeah, they just said restaurant, but I think the object of the game there, we'll see what kind of latitude we have, but the object of the game was, once it's safe to do so, they want to really encourage people to get back with their butts in chairs in restaurants. And then in order to do that, you can now take a full tax deduction for business related meals as opposed to the normal 50% deduction.
So with clients in meetings where you document the facts and circumstances, write down the names and the date of the event and what was discussed.
And what you talked about at that dinner.
Yes. Yes.
We'll believe you as tax preparers, but the IRS.
But it also applies to, meals that you provide for your employees, right? Because that was sort of the latest tax act sort of cut down on what used to be a little looser, but now what you can, almost anything is subject to the 50%.
Or ends up on a
deduction.
W, right? Yeah.
There was a clarification on that LLC and the event. I think that this is referring to that. There were 3 people in the LLC.
Yeah, okay, then Petra called it. You're gonna need to file a partnership tax return, in which case you definitely want a tax preparer to help you.
Yeah.
Okay. So I have one more here. Ellen asked, what are the penalties for taking funds from 529 college funds?
Were the funds used to pay for education or not?
Right.
Doesn't say, but that would make a difference, right? If it
Right.
were, if they were used for educational purposes, then that would be a whole different situation. And what would
Right.
that entail? What would that be? That would be okay?
Yeah, you can take funds out of a 529 plan to pay for an education, and I believe it's now K through 12 as well.
Yeah.
Not just college.
Right.
But it's got the same 401k 10% penalty on early withdrawals, I think, or on unrelated withdrawals.
That's right.
But I don't know if there's an exemption under what you were describing earlier for the COVID.
I haven't
don't
heard of
believe
one,
so.
no.
No.
No. Yeah, so it sounds like, I'm assuming this person wouldn't be asking this question if they were using the funds for educational purposes. So if they didn't use the funds for educational purposes, then yeah, you're gonna end up paying income tax and the 10% penalty.
Okay.
And those have to be educational purposes for post-secondary education under those savings plans, right? If you withdrew that for your child to purchase a computer, for example, for homeschooling.
I can look that up right
I'd have to
here,
look at
which-
what expenses qualify, but you can use it now for K through 12
Yeah,
expenses.
it doesn't, yeah.
Piano lessons?
Mm,
Just interjecting a note of humor there.
I mean, enrichment should be education because education is wealth, as you can see in this group of people here. But
So we've come to the end of our questions here. Does anybody have like maybe 1 or 2, you can even reiterate tax tips that you'd like to make? You'd like to say before we say goodbye, but I see we have Abby and Lisa here. Abby is our second Tuesday chair and Lisa Hammond is our president. So I'm going to have them sign off. But do you have 1 other tip, 2 other tips you want to just remind everybody of? That would be great.
It's a complicated year. I don't think I've been doing taxes for 30 years. And I just don't think I've ever seen anything like this. It's nuts. It's complicated. So,
I don't think we wanted to hear that.
I'm sorry. I don't know if we mentioned this one either, that there's talk of pushing out the tax deadline to June 15th. Yeah. All of the accounting associations have petitioned the Treasury to do so. There's talk about, I don't know if it will happen, but what's your feel for that, Valerie? Do you think it'll get pushed out to June 15th?
I don't know. The IRS commissioner keeps saying no.
Yeah.
But given the, impending legislation that is like I said, is like historically late. Like I've never seen in my career one that was passed this late after the close of the calendar year.
Right.
And so I feel like once that gets passed, the clamor to extend might be so huge that they might give in.
Right.
well, it's COVID, right? We want to avoid the wave. And last year there were so many delays. Like it took 5.5 months for my son to get a normal W-2 return. from the IRS because he filed a little bit late, just a couple weeks behind the deadline, and I guess it just got swamped. No, I guess my advice is don't put off today what you will end up paying one of us to do tomorrow.
I also liked Valerie's advice about being patient, because what I saw a lot of last year were my clients getting notices, and the notices really were, the notice would go out before the return got processed because the IRS was just so far behind. So don't panic when you get a notice from the IRS. Be patient, and it's probably wrong. You just need to let the IRS catch up.
Okay.
I don't need, I already said so much today. I took up more than my share. So I'll just say thanks for having me, and thanks for letting me, dominate the conversation.
You were awesome, Valerie.
No, this was great. Thank you so much, all three of you. This has been so enlightening and upsetting at the same time. Hey, and I see Lisa Hammond there.
Jazz hands. Hi. Hi, everyone. I just want to thank you all. I want to start with our guests, Petra Wilson, with CFO of Fantasy Network, and Valerie Mosley, CPA of Mosley VMCPA, our adored and revered Joanne Ort, CPA, and Ort CPA of our, that was really rude, I just touched my nose in public, and our revered treasurer, and the beloved Virginia Bogert for stepping in and hosting this tonight on last minute. You guys freaking rocked it and answered so many questions, and there are so many more, and I have a few. and the bottom line is we really need your expertise and advice. You are professionals on so many different levels, and it's going to be a bumpy ride for a while. So to all of our guests, our members, and everyone that's watching, please don't hesitate to reach out to any one of us to get us in contact with professionals that can help navigate through this craziness and challenges that we're going through. Virginia?
Hey, we have one other question. I don't know if we have time for it, but one
Do
other
it,
question
girl.
just came in.
Bring it.
So I want to, because it's kind of a good roundup question here. Amy still wants to know how impending legislation affects how we should file.
Well, like we mentioned at the beginning, part of the pending legislation is this exemption for unemployment. So if you file today and you collected unemployment, you're going to pay tax on it when you file your taxes today. But once the legislation passes and the systems get updated, you won't pay tax. So, but there's, and this is what makes it so complicated, is because there's also this second stimulus coming down the pike as well. And if you didn't qualify for the stimulus based on your 2019, then you might want to file 2020 so that you get the stimulus. I think you'll still ultimately get it, right, Valerie? My guess is the new stimulus will now be a reconciling item on your 2021 tax return.
I think so.
But remember, you're only going to have to repay, or you're never going to have to repay it. You're only going to be eligible for it if your income decreased. So if the income increased in 2021, but you're still eligible for it on your 2020 income, then you probably want to file.
Well, everybody's eligible. Most people are going to get it based on their
income. You don't want to file 2020 yet. And again, calculate both of those income tax credits on the 2019 and 2020 income, right?
Also, we didn't talk about the PPP loan at all today, which is actually kind of a mercy because it's this horrible, difficult, crazy thing. But as some of you know, there's been a second round of PPP funding, and that PPP funding is based on a drop in revenues, and you prove your drop in revenues based on your 2020 tax filing. So if you are in a hurry to get that PPP second round of funding, you might want to file soon so that you can prove using your filed tax form. So, the long and the short of it is that you may not make the perfect choice, and it may well be that you file now and then have to amend later, and that's not the end of the world. It's just
Right.
that-
On the other hand, if you owe tax, even if it's on unemployment income, you still want to file timely, because until it's legislation, if you don't pay your taxes on time, you will get there.
Right, and there's no guarantee that this legislation will, be finalized. We've seen things take left turns, before. So until it's actually like signature from Biden on there, it's not.
It's pretty certain, though. It made its way back to the House, and I think it made it out of the House today.
Oh,
So
okay.
it's pretty certain.
Okay. Yeah.
Yeah, so we just have to listen to the news and know.
Yeah.
Figure out when this is going to happen and when we should file.
Right.
Okay. Well, thank you all. Thank you, everybody, for helping out. And I'd like to invite everybody for April 13th, which is our next second Tuesday of the month. We don't know what we're going to do yet, but it'll be grand, I'm sure, and enlightening like this was. And thank you so much. This has been great, really swell.
Thank you all.
Thank
And
you.
again, we thank you to committee and our volunteer board, Abby, Meredy, on our TST committees. It's, we couldn't do this. We're a nonprofit. We couldn't do this without our volunteers. We couldn't do it without our membership. And recently we received a lovely, generous donation from one of our members, and she knows who she is. And I want to thank you. I know you're watching tonight. Thank you so much again. It means so much to all of us and our members moving forward in the grants with our grant. If you're interested in donating or being a sponsor to Women in Film Seattle, please contact us. We would love to have you join us as a sponsor or talk to you about what we can do to work together moving forward to support each other.
We also have a special deal this month.
Jazz
Go for it.
hands.
Go
Jazz
for it,
hands.
Lisa. I just remembered it.
Oh wait, look, Lisa's doing her hair. Oh my God. It's National Women's History Month. And yesterday was International Women's Day. And in celebration, Women in Film have a 50% off membership opportunity for those of you who are interested. You can find the details and the code on our website on the Join Women in Film Join Us page. And there are a few benefits, which include listings on our website and a couple of others that are national. So among other discounts from some of our generous sponsors, including Kerner Cameras, for those of you filmmakers, especially Formosa Interactive, and I could go on and on. So email me, look at our website, and contact us for details, because it's not a bad deal at all. And now this is where I go like this.
And I want to quickly thank Tracy for always
Yes.
the woman behind the scene, Meredy for fielding all of those
Meredy.
questions, and
Thanks,
Abby for
Lee.
being our second Tuesday chair, and all of the members of the board. Thanks so much.
Thank you all.
Thank you.
Wishing you well. And until next time.
Okay. Bye.